Hey everyone, hopefully you have a good day. My name's Andy. My channel's Finding Value. Scrolling through the comment section, going to answer some of your comments, questions. It says, hi Andy, would it be sensible for European investors to sell the FTSE, DAX, Nikkei, S&P index-based funds and switch to commodities? I wonder, apart from the S&P index, do you see a decline in other major indices? Well, I mean, one could play, you can stay in stocks. It's not going to be the worst. How can I say this? I wouldn't go all in on anything, but it's good to have a diversified portfolio. You can still have, those stocks, and it's diversified across currencies. So they'll probably do okay. It all depends on where interest rates go. If interest rates go to a very high level, it's gonna put more pressure on stocks to sell off. I would overweight commodities at the moment. That's what I'm doing. You're also going to have an aging population, so I think healthcare is going to be another spot that you could look at. Healthcare, like maybe insurance companies and healthcare providers and healthcare equipment manufacturers. I mean, they're just healthcare in general. I think is going to go up because if you have an aging population, they're going to require more care, which means more money. Hospitals and whatnot. So I'm not of the, I'm not going to say go all in on commodities. Some people have. I'm very overweight in energy right now, and I keep going back to energy, and they're not solving any problems. So I think it's going to get worse. That's kind of my take on it. It says I think you could have a successful website. You could consider something vaguely similar to Don Durrett. His focus is on fundamental and financial analysis of hundreds of gold and silver mining companies. Yeah, I'm more. What I like to do is I look at the big overall picture, like a big macro view, and I say, okay, what's changing to what? Where's the money going to flow? Once you figure that out, then you kind of dial in on some sectors. Then I start saying, what vehicles can I use to make money? And then I usually focus on the best sectors to make money in. In my opinion, the best sectors are in energy. They have the most leverage to the move that's coming up. So I have to look at the energy companies, and that's where I spend my time. Am I a great fundamental analysis guy? I'm probably not as good as some of these other guys who are really detail oriented. I like the big picture view stuff. I've always been a big picture view. I don't like getting into the minutia, I call it, or into the details and dive way in. And some of them in commodity companies, they're hard to do that. And I don't know if there's any way to successfully translate fundamentals of a company to an outcome and choose between a whole bunch of different companies and look only at the fundamentals and say, this one is the best one. Because I've always used technical analysis, and I've looked at it from like a fractal type, a fractal type view of things, where I'm looking at the price action to see how volatile or how strong the bounce is. I don't know how you could do that with fundamentals. And then I go back and look at the fundamentals. So basically I go fishing with ratios. I fish using ratios to find where the cheapest areas are at and where the money is not at. I look at the cost curves to see if we're below the cost curves. Then I look to see how much damage is done to the commodity company to see how low it's gotten. And looking at the fundamentals, some people would probably say that the company's too risky to enter. But looking at the technical charts, I'd say, well, this thing looks like it's ready to go, and it has a lot of buying pressure or short sellers where they're going to cover on the way up. And then you're going to get this massive launch. So it's really hard to marry the fundamentals only and marry it with a performance that could potentially come. Because what I use is the numbers before it, the fractal kind of approach, where it's like, how big are these movements? What are they doing? Are we about to break? And if you look at the fundamentals, you're going to say this one's not as fundamentally good as this one, but that's the opportunity. The opportunity is knowing that you're going after a company that looks worse knowingly because they've gotten sold off more. So the sell-off has pushed that company lower, and the opportunity is greater because the fundamentals aren't as good. So it's really hard at the bottom of commodity markets to pick through the rubble, so to speak, and say that this company will perform the best. And last time in the oil market in 2020, I kind of decided on ones that had very high debt levels and a little bit higher. They were kind of middle to higher cost producers that had really good bounce on that first bounce to move up. So I chose those, and they worked out. They are some of the best performers. And I chose it more on technical analysis than I did on fundamental analysis. So it's hard. It's really difficult to sift through that. And that's, I think, a special art to do that, to pick companies that are going to outperform, like vastly outperform the rest in the sector. It says, hey, Andy, who's this WhatsApp guy responding to comments here on your video? Do not click on any of those. They're not me if they're trying to pretend to be me. I do not have a WhatsApp. There are bots that come on and put a bunch of comments in the comment section. So I don't know them. Please don't click on them. They are not me. They have no association with me. So be careful out there. They have nothing to do with me. How can there be inflation when they have printed 40% of all the money in the world over the past couple of years? He's obviously joking. The money inflation will make this supply issue inflation look like a game of Pong. And I agree. There's so much money in the system sloshing around that inflation is going to be here for a long time, and it's going to be very dramatic. This person also said inflation was calculated differently in the 70s. How does the thesis look if we assume there's 15% inflation right now? And I said it looks spectacular. This money is going to rotate into commodities, and commodities are going to go vastly higher. We're already seeing that in some of the commodities. Natural gas in Europe, huge moves, huge moves. I know. Okay, so apparently I skipped over the Bitcoin chart to gold chart. What I can do is go there right now. We'll take a look at it right now. Why not, right? So we'll look at the Bitcoin to gold ratio. So looking at this, so Bitcoin's obviously been outperforming gold in the previous years. It looks like it's flattening out, and we hit a peak of Bitcoin to gold ratio of about 34-ish. We hit 35-ish here, and it's been declining down to 21. So if we were to take a kind of a viewpoint, much zoomed in, it has been declining. Now, I don't know where this ratio is going to go for the Bitcoin to gold ratio. Here's a 1-year chart. You can see that it peaked out 36 in here. It peaked out again at about 37-ish. And then we're declining quite dramatically. Went all the way to 19. We're starting to come back up a little bit for Bitcoin outperforming gold. The thing that I have with Bitcoin is I don't see a usage for it. That's where I get stuck. I do not own any cryptocurrency. Some people, this is their viewpoint. Their viewpoint is you cannot expand Bitcoin. It's maxed out. I think it's 21 million Bitcoins, I think is the number. And they'll say that it can't go more. It's limited, right? And I look at it like, so what? So what that it's limited? Remember, the thing that gets valued the most is the thing that goes into shortage that has great utility to society. These people are self-proclaiming that it has value. They're saying it's a store of value, but it's like, well, tell me why. Why is it a store of value? Because it can't be produced at greater quantities. Well, Hot Wheels collector editions, some of those Hot Wheels were made in limited quantity. But that's not more than Bitcoin. That isn't a store of value per se. I mean, it is and it isn't. That's not going up to $60,000 per Hot Wheel. Why is this different? What utility does this have to society where people are going to want to use this? That's where I go back to. And if it's slow, why would people use it for transactions? If they don't use it for transactions, then what value does it have? If people aren't drawn to it for any reason at all, I just don't get it. And then in an energy crisis or energy starved world, I don't know how Bitcoin would do very well if you're one of the biggest energy hogs of all the other cryptocurrencies. You can't do a whole bunch of transactions all at once. So, and maybe I'm limited. Maybe I'm looking at this short-sighted. Maybe they'll solve all those problems. But I'm more of a physical things. Investing in physical hard assets is where I like to be. You're out of the system. No one can control it. They can control this. They can control Bitcoin. They can see all the transactions. They can see who's doing those transactions. I don't want to be there. That's just me. That's my my opinion on it. So I didn't skip it this time. So we went over it. Coming on down. Wonder if there's going to be a reversion with real estate versus stocks. We'll see. So stocks, there's if you look at things from a big picture view, stocks should continually outperform commodities as technology increases. Commodities on a long-term perspective, so long that they are plentiful, basically what you're doing is you're looking at the technology development versus extracting commodities out of the ground versus stocks, which are businesses that are converting commodities into usable products. You can convert usable commodities into usable products and that profit faster than you can with commodities going up in price. So in a long-term perspective, stocks should outperform everything because on a certain time frame, because they can pump out, especially in the technology sector, they can scale that business very fast, very quickly in a very short time frame. So those should outperform under certain market conditions, so long that the commodities remain cheap. Now, if we transition into a world where commodities and ore grades and scarcity happens, then I would think that all of the businesses are going to suffer quite dramatically because that's the input cost for everything. And what I found is that liquidity driving into certain assets drives all this stuff based off interest rates. So kind of looking at everything, stocks will do well under the markets that we've come from. Looking out in the future, and I don't know the answer here. I'm just posing questions. If we go into an energy scarce world, what does that look like for stocks? It's probably going to be pretty rough because the energy scarce world is going to drive up commodity prices, and commodities have been historically the cheapest they've ever been against anything. So they're gonna move on up. Their value and their share of dollars in this world is going to move into commodities. And commodities, depending on how the supply demand balance is, if they start rocketing higher and we start getting shortages at some point, I don't know. I'm talking towards the back end. I think Luke Groman made a comment, and I agree with this comment 100%. He said, "We are out of cheap oil. The world is out of cheap oil. And what's coming up is very expensive oil. And if we go into an expensive oil world, it's going to blow up debt. Currencies is debt and all this debt. So if you blow up a bunch of debt, you could see currencies failing because we're out of cheap oil. It's gone. And we're not out of all of it, but we're out of the majority. And oil gets priced at the highest cost barrels because that's what we have to bring on is the high cost barrels. And everyone's looking at this from a cost perspective. I'm looking at it from an energy perspective. Energy is what rules all this, not money. Energy and the amount of energy to do work in society will blow up debt. It's not the cost. Some people say, oh, it gets too expensive. Just wait until you see energy shortages where you can't run things because you don't have energy. And I don't know, at some point, no matter how much the dollar is of oil or whatever, we could see energy shortages. We'll have to transition to something else. I don't know what that something else is, and I don't know if we have a solution for it. And I don't know if we're at that point yet. We could be, we might not be. It's difficult to know. It says, a friend I work with told me about this channel. Do you have thoughts on drillers? Will the share price go up with the oil price? Yeah, the drillers and the energy service companies will go up with the oil price. Oil prices have to get to a level where they're going to start self-funding themselves, all these oil companies. And then obviously they're going to need services, which the service companies are going to start making a lot more money. And with the decline in good properties, they're going to have to drill a lot more and get a lot less. The cost of oil is going to go up because they're going to have to continue to drill. They're going to have to continue drilling in copious amounts to get less oil, which means they're going to have to even intensify their drilling even more as we go to lower and lower areas where the oil isn't as dense, isn't as big, the deposits, and we may have to be scraping it out of sand, oil sands or shale or something like that. Coming in here. So Adrian, I think you've said this. It says, but Andy, the stocks to real estate chart shows that it's generally always going up. So being higher than it ever had been seems like the norm, in my opinion. I said it's a 40-year decline in interest rates as well, and that pushes money into stocks. Yeah, but at least we broke out of that, didn't we? We just did recently. We just broke out of that 40-year decline in interest rates, and we'll see how high they go. If they go higher, I would suspect that real estate is going to outperform stocks quite dramatically. We could see a massive move lower in stocks, depending on interest rates. But I don't know if that's going to happen because they're probably going to come in and do yield curve control. What I mean by a massive move, we could see 80% decline in stocks. We very well could if interest rates get to a certain level. The problem is they're stuck between having very high inflation for a very long time and the actual real value of stocks. So what they're going to do is they're going to inflate the crash. It will be a crash in the dollar and not in stocks. So the nominal value of stocks will remain the same, but the value of the dollar will crash, and commodities are going to account for that value of the dollar crashing. So the commodity prices are going to go up and outperform stocks, but stocks may just go kind of downward to sideways. It won't have this 80% crash. The crash will happen in the value of the dollar. And that's what we're seeing. That's kind of what I think is going to happen. I know you had another comment. I think the comment was that uranium is trading with other at-risk assets, something like the NASDAQ. And that's what I think. It's going to, in the beginning, all this is going to kind of sell off because everything's leveraged up in the beginning. So you're going to get the sell-off because everything's leveraged up and tied together. Because when something happens and you get a sell-off, they have to raise money for margin calls. So they're going to sell basically everything. That's kind of what we've seen. At some point, they're going to disconnect themselves, and you're going to see a rocketing when this money starts to rotate over and sell out of bonds, definitely out of bonds, perhaps stocks at some point, and then rotate over to commodities. But in the beginning, it's sticky. They stick with each other. They'll kind of come down together, and then they'll break apart. At what time will that happen? That's difficult to time. So that's kind of how I think it's going to happen. It's going to be sticky in the beginning, will break apart, and then it's off to the races. The money is going to flow into precious metals and commodities and real estate. Those are the spots that I think that will be the safest. It says, if the price of oil can go negative, how can it not go exponentially the other way? It's going to. It's going to be big. I'm a huge oil bull, guys. I am huge in oil and even uranium, because energy, it's what makes the world go round. That's why humans are so successful. It's the ability to harness energy. And that's how we've built all these things. That's how we've progressed our advanced societies, is the surplus of energy. if energy becomes more scarce and a lot more expensive, we're going to have to find either, we can go two routes. We can find more energy or develop new technologies, which I don't know if there's a technology to develop, maybe fusion, and that's it. Because, I mean, we can use our energy more efficiently. That's the other option. So we either find more energy or we use it more efficiently. The problem with using it more efficiently is it drives the costs lower and more people will adopt it. And then you're back to square one with the energy problem of not having enough energy. It seems like anything that we do on an efficiency front or on a manufacturing front will drive the cost lower. And driving the cost lower means that you'll have greater adoption. And greater adoption means that more people will own whatever. Hardly anyone used to own a plasma big screen TV, the thin TVs. Then that went to LCD, then it went to LED, and now everybody owns like multiple TVs. The greater adoption. And the components that go into these TVs, I have a TV right next to me, kind of. That's where you're just going to drive the demand for everything higher. So I don't think we can use the efficiency button. I think it's just a matter of how many humans we have on Earth, and then we'll call it the population will have to slow down at some point once energy gets to a certain point. If we get to energy scarcity, but that, I don't know. I'm just talking kind of out there, and then I don't know when this is going to happen. Well, I'll stop it there. It's getting kind of long. Give me a thumbs up for the content, guys. Subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.